Okay, hello everyone. Welcome to the Hodder cast. I think this is episode 80, and we're here with special guest Aaron Krowne of Krowne Law. So, Aaron, thank you so much for taking the time tonight, and maybe you could give us a little background on yourself, how you got involved in, became a crypto attorney.
Yeah, absolutely, and thanks for having me, Sasha. I have sort of an interesting background, but I think it makes sense for the field. So I started out in CS and IT, and I got my master's in computer science. I got that in 2003, which I guess is ancient now. And then I worked for a few more years as a research software developer, basically as a data scientist, is what it would be called now. And during that period, sort of the early to mid 2000s, I started a few online ventures on the side. And then in 2007, I switched to one full time. It was an online media company focusing on the financial crisis. And it was also sort of a way to geek out on monetary alternatives and things like that. So I switched to that full time in 2007. And basically, that ran its course after a few years. But during that process, I mean, A, it gave me a lot of experience with startups. B, as things got more legalistic in my business, I started to think, hey, I can do this law stuff and potentially help people that were the earlier me who were in tech-centric business, but I didn't necessarily know the legal part and were very intimidated by it. So I sort of crossed over into law starting around 2010. And it's essentially my third career, but sort of combines everything else previous. So I did, sort of set out to practice tech law and focus on startups, which I did, and business, and was doing that for a few years, and then starting around 2017, we had this big ICO boom, which I'm sure everyone tuned in knows about. And I started to have clients approach me and ask me about doing something in blockchain. And so my experience as sort of a tech geek and a monetary buff went back in crypto to basically the beginning. I remember evangelizing the Bitcoin paper pretty soon after it came out and thinking this was world-changing. And I shared that around and sort of played around with tech. Unfortunately, did not accumulate and hold any big positions, but I did get experience with it and sort of looped back into it in 2017 when the ICO boom happened. So at that point, it was familiar to me, and I just sort of jumped in with both feet.
Yeah, that's a really good background to have with all that tech background for this stuff. And I guess we should disclose maybe, we came to meet, we're working on a project together, like both advising on it. And I've been so impressed with just how you're handling the clients and your approach to everything. And you're so fast to respond with these really insightful emails to them. So it's been
thanks. Not for the last week, you're ahead of me, but it's a pleasure to work with you. And yeah, it definitely takes all talents in the team, and I see you have more of the financial side background than I do, so it's a really, really great match.
Yeah, it'll be. I think we make a good team here. Yeah. But so after the SEC guidance came out on April 3rd, you were quick to get on the blogs with it, and maybe you could give us just kind of your overview, your takeaways from the.
Yeah. So for the April 3rd releases from the SEC, which were the digital asset framework and the turnkey jet no action letter grant. So I'd say the top two takeaways, are one, that the SEC does want to continue to take positive steps in the blockchain space, to advance things somehow, and it recognizes there's a need to do that. But the second big thematic takeaway I had was that it's still remaining quite conservative in terms of what it believes is allowable. Mm-hmm. And in particular, it apparently doesn't want to signal that it has sort of given any ground from what has traditionally been the domain of IPOs. And I think it's understandable from a perspective of concerned for not sort of firing a starting gun, and sort of being responsible for restarting something like the 2017 ICO craze. So I think that's what's going on under the surface.
Mm-hmm. And it was, a lot of people were criticizing them on, for their giant disclaimers of like the SEC neither approves or disapproves of this message and things like that. And I guess it all does, have to come from a court rather than the SEC. But I thought it was good to get, now we at least know where we stand with the SEC a little bit better, before we just had the Howey test, but there wasn't a huge body of case law, and I guess it is growing of how to apply it, but
it's happening. We have like the kick Wells notice situation. So I think that's probably the leading case that is
the only one fighting them, really.
It hits on a lot of the utility versus security issues. So watching that very closely for sure.
Mm-hmm. And this one had the new word or the category, the AP. What did you think of that?
Yeah, I mean, I think that's fair enough. I mean, they risk confusing people by creating new terminology. But I'm a big fan of treating sort of a promoter group that's genuinely a promoter group as covered under the securities laws. Mm-hmm. And I think in token land, there's a tendency to forget that some of the more loosely connected folks may nevertheless be acting as promoters, as part of the venture's promoters, which implicates a variety of concerns, not only the issue of securities to and through those people, but also Section 17B, which sort of restricts how you can tout a securities issuance. Mm-hmm. So, that's fair, I think. The danger is, of course, trying to extend that status to people who are sort of useful work contributors to a network. But I think the SEC recognizes there's an issue there. There's a distinction between those that are doing useful work and those that are acting sort of like conventional promoters of a venture.
Yeah, like the DJ Khaleds and Floyd Mayweathers of the ICO world.
Right, and there's all those examples that they're concerned about for sure. So they're sort of tiptoeing around kind of a minefield, and they just they don't want people to go crazy with any of those aspects for sure.
Yeah. I think the action has certainly cooled off since they started doing enforcement, but I don't know if it was that it cooled off because of the enforcement or because the market, all the values went down so much that people kind of aren't willing to invest in them anymore, but they kind of went at the same time.
It was sort of a 1-2 punch. I think my sense is from talking to clients and potential clients that there's a huge amount of trepidation about doing anything in the U.S. And there are those that there's still a group that's sort of resolute in doing that, particularly if they're based in the U.S. anyways, sort of have to figure out a way. But I do think that it took about a year, but the memo from the Dow report was finally received, and it really chilled things, and then the market cool just set in, after getting a ways into 2018. So it was certainly both things, but I think there hasn't been sort of a big opening from the SEC yet in terms of guidance, and I don't think this is it. But if they ever do something like that, as opposed to it coming from a court or something, that would be a game changer for sure. I mean, that would be big. But for now, it's a cautious stance.
Mm-hmm. And in their writing, they seem to have a big emphasis on like the consumptive aspect of the token. And I thought that was, there's that case, the United House Foundation versus Foreman. It's a 76 case. And I know it because I did a parody video with this counterparty token, DJ Pepe, where it's like but the holding in it is that if you use or consume the item, then it's no longer a security. It's not under the securities laws. And I think
Right.
that's why, Tesla, or like the actual car, or trading card, like physical, baseball cards are not considered securities, because they're used and consumed. So they're saying, like, there is a possibility to use or consume. Like, they've acknowledged that there are tokens that can be consumptive, and those might be, that's what they're looking to maybe create some kind of exception, or they're saying that the Howey factors don't apply if it's a consumable thing. But, so far I'm not too familiar with a lot of consumable ICOs, like, what are the tokens for? But it's nice that they're carving that out for people, that if they do figure out a way to incorporate a token into their business in a way that makes sense, that's what a lot of the factors look to. So what do you think about the consumable side of things?
Yeah, I mean, that's still an important focus of the guidance they put out. They haven't gone very far in detailing that, but like you said, there's some leading case law on it, and they sort of have to respect this consumptive aspect.
Mm-hmm.
So I still think it's pretty central to the whole set of factors that they've set out. I don't think it was as new in the recent release. They sort of were already talking about this,
Mm-hmm.
but it's still very important, And so they said that in the framework they put out, that it's a total facts and circumstances test, right? So all of this is sort of thrown into that. You certainly aren't going to have them assent to a utility token in a public sale unless there's overriding present functional use. I think we can say that pretty much for sure. And I think that Turnkey Jet showed that any model that could be described as a closed vendor locked point system that's just happens to be implemented with blockchain tokens, where the actual consumptive purpose is available, and an investment purpose is infeasible or impossible. So in that kind of situation, I think it's clear now that that you can sell a quote utility token.
Mm-hmm.
But beyond that, we don't know where the line is drawn, and I think it has to be drawn somewhere, because there's no prohibition on selling products or services generally where you're pre-selling them. So why can't you do it with blockchain tokens? So I think the SEC, they're going to have to give ground there eventually, and they're theoretically leaving it open. But I think at this time they're reluctant to draw a line that says, you definitely can pre-sell tokens to a certain extent. They're sort of leaving it all vague and seeing what happens.
Mm-hmm. And do you think this consumptive aspect is kind of like a piggyback on what they were talking about before of the sufficiently decentralized, or are they two completely separate things?
I think there are crossovers, right? So the decentralized, I think that was a thing where they were trying to sort of tackle the Ethereum question, and that was really front and center in considering Ethereum was, whether it is currently no longer a centralized effort, and there was the implicit question of basically, if you don't have a centralized effort, can you have anything that's subject to the securities laws at all? And I do think that that's an important question. Mm-hmm. But as I pointed out in an earlier blog post, you don't have to have a decentralized venture or company or something like that to not sell securities. I mean, we all the time we buy cloud services from companies that are a centralized company. It's Microsoft, it's Google, it's whatever, Dropbox. You have a service contract from them, and you have a right to services with that, but nobody's saying that contract is a security just because it's a centralized company. So it struck me pretty early on that couldn't be the end of the analysis, and that the door had to be left open to have some sort of coherent venture. I don't know if centralized is the right word, but sort of something more with the shape of a traditional venture that nevertheless used blockchain, but was not selling securities. So there's this whole space in between of a decentralized project and a more centralized venture where you still can sell things that are not securities, just standing to reason, and looking at just the shape of the existing case law. So I think they eventually realized that as well, and have sort of moved beyond that in the latest release, and pivoted to sort of trying to get at where, answering some of those questions. So what in that range of having a non-decentralized project can you nevertheless legitimately sell tokens? If that makes sense.
Yeah, and you got a front row seat to Jay Clayton's speech in the fall too, where he talked about the Broadway tickets. Can you elaborate a little bit on what happened there?
Yeah, I think that hits right on what I was just saying. I think he was focusing on the distinction between the time where a venture is more conceptual, it hasn't built anything usable in the market, from the time to where buying goods or services means there's little doubt that you can access those goods and services and consumption. So I think that was sort of the concern, is what that transition point is. And Broadway play financing is actually a good example for that, because there's a long history where through this history it was determined that the interest in Broadway shows are securities. You can't get around securities laws just by pre-selling tickets to shows before the show opens. So that would violate the SEC's economic reality maxim. You'd just be getting around the securities restrictions. So they don't allow that, to any extent they can. But once the show opens, you can clearly sell tickets, and everyone understands that those tickets aren't securities. Why is that? I think in reality, it's because the value of the tickets is no longer speculative. Not that they're decentralized, but there's no longer any doubt that the show will come together and open. It's already open.
And you're going to consume the show. Like, I wonder if that plays into it at all.
Yeah, absolutely. I mean, well, that's the presumption, right? I mean, you could buy tickets and resell them.
Yeah.
But it's sort of cumbersome to do that. And it's just it's not the presumption. So
especially once it's open, it's probably really difficult to resell them, or at least to get a profit on the resale.
Right. There's all that, and the show could close early, and you could be left with tickets, right? I mean, just like any business can go out of business, even if you still hold a service contract. But I think there's an implicit recognition in securities law that amount of risk is acceptable for consumers to take on. So a contract, or a ticket or something like that, doesn't become a security just because a show could go out of business, or just because you could in principle resell that ticket or contract. So I think he was sort of focusing on the decentralized part because everybody was talking about Ethereum and the question about Ethereum. And what he really wanted to say was that, past a certain point, the venture is not speculative, so securities law shouldn't be implicated. I may be putting words in his mouth, but I think that the latest release sort of validates that decentralized wasn't really the focus of that sort of metaphor.
And that's probably why they were able to issue a no action letter for turnkey, because it didn't have any decentralized questions about it. It's more clear cut on the consumptive side, or
right. Absolutely. I mean, that, like I said, it's a locked in platform. You're really just pre-buying credits to use this network of jets. And you can actually resell the points within the platform, but you can't really make a profit doing it. They sort of designed it so it's going to sort of stick around $1, per unit. So they showed the SEC that there's really not going to be a lot of fluctuation in value. You can't take them off of the platform, and resell them on a third-party exchange. All the way down the list, that the company was not going to use those proceeds for development. So they basically cut everything away, pretty much everything that people were excited about being able to do with tokens for ICOs was pretty much cut away. So it's turnkey jet is basically just a closed vendor points system, and that happens to be implemented with blockchain. And the SEC said, sure, in that case, we're comfortable with that. So I definitely I give them props for finally sort of approving a utility token, but everyone needs to realize that it is a very limited case.
Mm-hmm. Yeah. And then so in their framework on it, they gave quite an in-depth explanation on the reliance on others, like prong of the Howey test. They went through what the managerial efforts are. And I guess that would be kind of linked to that AP person, or what the team does versus, when it becomes beyond the team. Do you think that, like, when do you think it changes from being the managerial efforts to beyond? Because, like, if we do look at something like Ethereum, maybe, I don't know, there's a lot of debate on that between, like, the, Bitcoin maximalists would all say it's still very
Right.
tied to the management team. But is there ever a point, like, once the token is onto a secondary market, it's never going to go away. It always exists, whether there's a team behind it or not. The second that thing's traded, it can go to 1,000 other people if there was a demand for it. So when does, I guess, if the management shuts down completely and quits, that token is still going to exist. So
yeah, I mean, and that's not the case in Ethereum, right? There is sort of a very influential core group, but the SEC said that we don't think it's a security. So that's definitely important to note, that they're not demanding an absolute of having no, I don't know if central is the word, but a group that could be considered a core group. So I think that's good, and I think that this is the kind of question where the decentralized part has to be untangled from the general question. Securities law doesn't require that there be no managerial efforts by a centralized promoter. Like I was saying, the Microsoft or Google, cloud services example. But certainly, if there is no central control or influence, it looks nothing like a securities offering. It's more like just open source software, right? And I think it's pretty clear that just open source software plus a network is not a security. Doesn't implicate securities. But I do think the SEC was acknowledging in the digital asset framework that it doesn't want to draw a specific line yet.
And it took all those steps to talk about what the management can do to, like, restrict the price. Like, they don't want people artificially inflating the price by buying it themselves, or if the manager is holding a big supply of coins and they could just dump those on the market and tank the price, or burning them. That kind of stuff, I think, was important to them.
Absolutely. That, to me, that those were the biggest new takeaways from the framework, is that the SEC, they've mentioned some of those before, but I think they really underscored them this time. And so those are like classical IPO factors, where you have incentivized team and early investors, where you have you're going into a broader trading exchange, a general public exchange of some sort, in those type of things. So the SEC doesn't want to just give up that territory completely. But in the meantime, I would put the focus more on whether purchasers are buying because of the speculative value of what the promoter or the manager might do or contribute, if there is one, right? If there isn't one, then it's decentralized. There's really it's kind of a separate analysis. But if you do have a central and very influential group, or even a controlling group, I think you have to shift the focus to what is the bargain for the purchasers, and what's the reality. It's almost like you could have a test where the test is, if you're mostly buying tokens expecting that some venture composed of a separate set of people will make that token go up in value, as opposed to your own perspective and plausible, realistic use of the token for products and services, then it's suspect as a security. So it's this sort of, is that dependence there, or that hope, and is it legitimately there? So that's a blend of, what are the characteristics of the offer, and what are the characteristics of the situation. So all those factors that you mentioned, about likelihood that it might be, pumped or traded speculatively, or on the other side, are there position limits and things like that, and restrictions to trading. So those all go to, whether it's likely a situation where it's being bought for this hope that somebody's going to boost the value. So.
And I guess with it, if you get something so I'm still, I guess, trying to wrap my head around exactly what the consumptive tokens are going to look like, because I don't think there's any out there right now to use as an example where people are using like a blockchain token to buy goods or services in a big way, other than maybe Bitcoin. I mean, there's a few things out there, but for, like, say, a movie theater that's only going to accept movie theater token, and that's kind of, I think, what the SEC is looking at, or a concert that's only going to accept concert token to get in. And so then they're looking at those tokens and say, okay, well, if the price of the concert is $10, it must not be a very good concert, but if that's what it is, why are people buying 1,000 tokens and paying $100 per token if they're using it to go to a concert where they need one themselves to get in and pay $10 for it?
Yeah, so I have a no action letter request submitted for a client right now, and it fits broadly into that sort of example, and so the position limits are being limited by that project, and there are sort of drag forces to keep you from being able to take tokens off of the platform without taking a hit in value. But they don't want to completely limit the token to be locked into their platform. So that's an example of a question. And of course, it's my client. I completely have faith that the utility purpose of the platform is real, and that everybody involved is focusing on that. But that aside, it's really probing at the open questions as to what precautions you need to take to sort of sufficiently disconnect the value of the token that people are buying it for from the speculative boosting efforts of the promoters. And we don't know. Like you said, there's not a lot of projects doing it. I can name a few clients, that have some of them are non-US, so they just went ahead with it, and they didn't have to heed the US concerns as much. But yeah, some of them are US and have had to dramatically slow down, and focus on traditional private round funding for now. But yeah, I'm hoping in a matter of weeks to know more from hearing back on this one no action letter, as well as some other interactions with the SEC.
Yeah. Well, the fact that they did this first one, maybe they'll just start answering all the no action letters. That would be awesome.
Yeah, I mean, they also haven't granted any Reg A Plus token offerings, so
yeah,
it's almost like you would think that would be easier and less sort of revolutionary. So I don't really know what the holdup there is, but it could all, in large part, be about capacity and about a learning curve.
Yeah. I think they're trying to proceed with caution, obviously, but we'll probably get there in a couple years.
Yeah, I mean, it's going to all look very different in a couple years, I'm sure. And there's legislation pending. Who knows, what the prospects are. Some legislation has been squeaking through the last couple years, but yeah, it's. I like the legislation that's been drafted coming out of
are you talking about the Taxonomy Act?
That's one of them. Yeah, there's the Taxonomy Act. There's the what's the other one called? There's one that clarifies the money transmitter situation somewhat. I forget what it's called. The Blockchain Regulatory Certainty Act, I believe.
Yeah.
And then there's one more that basically puts utility tokens under the FTC, which I think is the right place. So it sort of makes that more of a consumer regulatory issue.
Mm-hmm.
So, yeah, I think those are all very productive, and I hope that in some form some of those get through, and it
Yeah.
helps
And
shape
even if
this.
they don't pass, it at least forces the regulators to look at it, examine it, learn, bring their own education up, so that as we move forward, I think it's going to be a very slow process, especially that trying to change any securities laws. Like, these laws have been in place, and they've actually been pretty successful in building probably the world's strongest market. Not that
Right.
it's not without some of its faults or slow or cumbersome, but it hasn't.
Yeah, absolutely right. I mean, the SEC, they don't want to ruin a good thing, and they don't want to destroy their credibility, so they're going it slow. For everybody in token space, it feels like it,
Really slow. Yeah.
yeah, it feels like it couldn't be any slower, but it is what it is, and they are trying to move forward. So that's a big takeaway I had from their latest moves.
Yeah, I'd say the overall thing from this is just that they did carve out that there can be a utility token, which compared to
Exactly.
this time last year when we were told all ICOs are securities, it was like he did say something about if a token was used in a book club, and it was made sense
Right.
there, but it's definitely the mantra or the dialogue has shifted a lot over the last year in a positive way towards the creation of this utility token. Now, whether the utility token makes a lot of sense for businesses, like if the price
Hmm.
can't fluctuate, then there's not really, like, that takes a lot of the fun out of having a token. As part of it is speculative, and we're all a little bit risk
Hmm.
takers, and getting the money up front. Now you can't get money up front to build a network. Like, they want the network already built, so probably
Right.
most companies will have to get some kind of venture capital funding,
Which they've been doing, at least within the U.S. orbit.
mm-hmm.
So yeah, I mean, I certainly would continue to advise clients to be very cautious about using any token-based funding,
Yeah.
pre-sale funding for development within the U.S. But I think that there's room to carve out something, um, whether it's something like you have to use less than a majority of the funding for development. Um, as compared to conventional sources that follow exempt securities compliance. So
Mm-hmm.
yeah, but they're going to start conservative, of course.
Yeah.
But as an attorney, we have to advise clients, what the risks are as things stand, and they've laid out a bunch of factors, and basically everything fun and novel is in there as sort of a potential red flag. So we have to
Yeah.
advise people to proceed with
But
caution.
if someone was able to get a utility token that had a lot of utility, and people were using that, movie ticket token or whatever it is a lot, that could spike the price a little bit, but it would come organically from the use rather than from some speculation. So,
Right.
I guess maybe we'll see some, if someone masters that, there is
Right.
a way to be successful in that. Now there's a little tiny area that's carved out, I think, that a smart
Right.
person can navigate through and maybe make something successful.
I totally agree. I mean, I think that the conceptual space is there. The SEC is just looking for sort of examples and standards that help them paint more fine-tuned conditions.
Mm-hmm.
But I totally agree with what you just said. So yeah, it is what it is for now. But I think it is going to progress. And they did say it's all a balancing test of all facts and circumstances. So in theory, none of it is absolute yes or absolute no.
Mm-hmm.
So that they're acknowledging now that you could have some extent of things like trading on third party markets, and things like using some of the funds for development.
Mm-hmm.
So we'll see where it goes.
Yeah, it'll be exciting to watch both the SEC's actions and the market's actions. If anyone can, kind of rise up and figure out a way to do this well.
Well, we'll be working on it,
Yeah.
for sure.
All right. Thanks, Aaron. And where can people find you?
Yes, at crownelaw.com, KROWNE law.com.
Okay, perfect. Well, thank you so much. And we'll talk to
Thanks
you
for having me.
soon.
Yep.
Thanks.
Talk soon. Thanks.
Bye.
Take care. Bye-bye.